So welcome to this lesson 4, and today we are going to look at the pension scheme. The pension scheme. So just write pension scheme plan, pension scheme plan, pension scheme plant, pension scheme plan. So this pension scheme plant, it's like a pool because you are contributing money to your set aside scheme, which you will claim maybe at the retirement or at the expiry of this period. So these companies, they have to maintain their books of accounts, and they will maintain the statement of performance and the statement of changes in net asset or the statement of changes in assets. So let's define what is a pension scheme, and then you say pension scheme financial reporting refers to pension scheme financial pension scheme financial reporting refers to pension scheme financial reporting refers to the preparation, refers to the preparation, refers to preparation, presentation, and disclosure of financial statement, and disclosure of financial statements, and disclosure of financial statements, and disclosure of financial statement for pension plans, for pension plans. You put a full stop. Another line, you say this report provides stakeholders. This report provides stakeholders in bracket trustees, regulators, employees, employees, because even employees can be also the shareholders, and members, with critical information about the financial health, with critical information about the financial health, performance, financial health, performance, and sustainability, of the pension scheme, of the pension scheme. So that is the definition of this pension scheme plan, or what do we need. So you have to prepare this financial statement. This financial statement helps the stakeholders, who is the trustees, employees, and members of this scheme, on how the company or this scheme perform in terms of performance. So once we know that, now we need to know the types of pension scheme. So write types of pension scheme, type of pension scheme, types of pension scheme. Number one, you write a defined pension scheme. A defined pension scheme. A defined pension scheme. That is number one. A defined pension scheme. Then you say, a member receives a predetermined. A member, you say a member receives a predetermined pension. Say a member received a predetermined. A member receives a predetermined pension based on salary. A predetermined pension based on salary. Based on salary and year of service. And year of service, full stop, and year of service. Another one, you say, a financial reporting forecast on liabilities. Another point on this, you say, a financial reporting forecast on liabilities. Focus on liabilities and actuarial assumption. And actuarial assumption and actuarial assumption and actuarial assumption. So that's what the first type of pension scheme is. We'll go to number B or number two. Number B or number two. Number B or number two, you say defined contribution scheme. This was defined pension. Sorry, defined, this one supposed not to be pension scheme, but defined benefit. So change this one to benefit. Benefit scheme. Benefit scheme. So number two, you write number two, you write defined contribution scheme. Defined contribution scheme. Defined contribution scheme. So let's define this and say members' benefits depend on contribution. Members' benefit depends on contribution. Depends on contribution. Depends on contribution and the investment performance. 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 Another point to say, financial reporting emphasizes asset valuation. Financial reporting emphasizes on assets valuation, on asset valuations, and contribution received. And contribution contribution received, and contribution received, and contribution received, and contribution received. So let's look at now, after defining these two, we need to look at now the financial statement on this topic. The financial statement. The financial statement. So write the key financial reporting standards. Key financial reporting standards. Key financial reporting standards. Key financial reporting standards. The key financial reporting standards. And then we have the IAS and IFRS. We start with the IAS 19. We start with the IAS 19. We say that this IAS 19, it focuses on employee benefits. So in bracket, write employee benefits, and then to say it governs the reporting of pension liabilities. It governs the reporting. It governs the reporting of pension liabilities, and expenses by employees, and expenses by employees, and expenses by employee. So number 2 standard is IFRS 9. IFRS 9. And then for IFRS 9, you see this is for financial instrument. IFRS 9 is for financial instrument. That one is for financial instrument. And then to say relevant for pension plan investment. So it guide on. So say relevant. How do we write relevant? Say relevant for pension plan investment. Relevant for pension plans investment. And then the last one is IAS 26. IAS 26. That one to say accounting and reporting by the retirement pension plan. Accounting and reporting by retirement benefit plan. Put explanation and say provide guidance on financial statement for pension fund. Provide guidance on reporting of a pension fund. Pension fund. So having seen the standards, having seen the standard which govern this preparation of the pension, you need to know some of the statement which you have to prepare in this topic. So we have a key statement, which is the statement of net asset available for benefits. So the first statement you see, statement of net asset. Can we call it one? Yes. Statement of net assets. Statement of net asset of the pension. Statement of net assets. Statement of net assets for benefit. Sorry, for benefit. For benefit. Then so this one we can explain and say it comprises of list of assets, liabilities, and net asset of the pension plan. Say it comprises list of assets, comma, liabilities and net asset of the pension fund and net asset of pension fund. Put a full stop. And net asset of pension. Good. So the key components here is the investment, contribution receivable, and liabilities. So we have the key components in that statement. So key component. You say investment. So we have the investment, number one, investment. So this investment comprise of equity, bonds, and the properties. Comprise of equity, comma, bonds, and properties. And then number two is the contribution receivable. Contribution receivable, which will fall as the current assets, which will fall as a current asset. And then number three is the liabilities. So like pension payables are liabilities. So if you declare the pensions to be paid, but you have not paid, then we account it as a liability. So let's see the second statement. So the second statement is statement of changes in net assets. Number two is statement of changes in net assets. Statement of changes in net assets available for benefit. Available for benefit. So you say shows the movement in pension fund asset over a period. Put an explanation. Say it shows the movement the movement of pension fund over a given period. So it shows the movement in and out. So some of the example are or the key components under this, the key components or examples. So we have the key components. Key component. So the key components we have there is number one is the contribution received from employees, contribution received from employers and employees, contribution received from employers and employees. Because even if you look at the pensions, like for government and SSF, the employer and employee should contribute the same amount. Number two is the investment income. Number two is the investment incomes and changes in fair value. If a property change or there is an incremental of the property in value, then that one will be an income to the pension scheme plan. Number three is the benefit paid to members, which is act as an expenditure in this case. That is benefit paid to members. So it acts as an expense in this case. And number four is administration and management cost. Administration and management cost. So in short, this one is like a P&L. This one is like their P&L, and the other one is like the balance sheet. So those are the theories which you need to know in this topic. So we now need to know the format of the two statements that we have mentioned. So we need to know the format of the two statements that we have mentioned here. So any question? So we'll start with this one, the statement of changes in net assets. The statement of changes in net assets. The statement of changes in net assets. Oh, topic nimeivuta, should be pension topic. So let's start with the statement. Statement of changes in net assets. So you will start with the maybe ABC pension plan or a company, ABC. So we'll start with the interest income. If they have the interest income, so this one is not even like, it is not an income, like it's a kind of a cash flow. It's a kind of a cash flow where we'll have to compare the inflows and outflows. So we'll start from, if there's any interest income, you put there if there's any interest income. Contribution, if there is contribution from members, contribution both for employee and employer, employee and employer. And then if you also have other contributions, which apart from that, which we can get in the question if we are, so that one will give us the total contribution. And then some of the expenditure, we have administration expense, benefit paid, What else do we need to put there? If there is any withdrawal from the scheme, it's also part of the expenditure. Withdrawal from scheme, also put there, you get the total. Also this one get the total. So if you subtract the two, should be able to get our net assets. So this one is the one that you're going to take into the first statement. So the format of our second statement, which is the statement of net asset, statement of net assets. These ones we say it's like a balance sheet. So you will start with the non-current assets, which you have like PPE. If it happens that you have the PPE, fixed deposits. We have investment. So if there is any investment they have done to the investment, either in quoted or non-quoted. The investment, it can be the one which it is quoted in the security exchange or non-quoted one. So we'll also need to put there. If it is an offshore investment, so investment is classified in so many categories. And then you will have that one will give you the total non-current assets. And then we have to the current assets, which we have contribution receivables, contribution that we have not received, contribution receivables, we will put there. Also, the interest receivables, maybe from the investment, but they have not paid. Interest receivables, also put there. Another one is prepayment in management fee. If there's any prepayment in management fee, and then here we add the fixed deposit. Now here, if we have the current deposit, also put there. So that's enough. So that one will be able to give us the total current assets. And then we now have finance by, or the equity. So we'll get the accumulated fund brought forward. Accumulated fund brought forward. And then we will pick these net assets here. We'll pick this net asset. So that one will give us the finance by, and then to go to the current liabilities. Current liabilities. Current liabilities. Current liabilities. So under the current liabilities, we have said payables, if there is any pension payables, provision for exchange losses, if there is any pension or benefits payable. Benefit payable you have to put there. We have those provision, if there is any provision of exchange gain or losses. Exchange rates. You can just say exchange rates. So that one will have the total which will correspond with this. That one. So that is the format of the two statements which you have to prepare. The statement of changes in net asset and the statement of net assets. So can we have an illustration? Can we have an illustration? Can we have an illustration? Or if there is anyone who is like to ask a question, then you are free. So check April 2024. Check April 2024. Question 4B. April 2024, question 4B. So with the question, we have been told that Masrui benefit scheme is a registered retirement scheme. Full stop. The trustee of the scheme extracted from the trial balance as of 30th September 2023 is as given as follows. We have the debit and the credit side. Interest receivable, payable to member, receivable from members, current account deposit, fixed deposit, accumulated fund on 1st October 2022, employer's contribution, and then I'm not reading the values. You can get it from the question, the values. Offshore investment in shares, property, plant and equipment, government securities, investment in quoted shares, provision for exchange losses. You can see the side in the trial balance, on the credit side of the trial balance. Interest on the investment, members' contribution, management expense, withdrawal from the scheme, pension and the commutations. Additional information number 1. Interest on investment amounting to 24.5 million was accrued as at 30th September 2023. Number 2, management expense of 450,000 was prepaid as at 30th September 2023. You are required, Roman 1, the statement of changes in net asset for the year ended 30th September 2023. And number 2, the statement of net asset as at 30th September 2023. So we're going to prepare these two statements, starting with the first one, statement of changes in net assets. So we'll write the name of the company or the pension company here, called Mazuri Benefit Scheme statement. of changes in net assets for the year ended 30th September 2023. For the year ended 30th September 2023. So we'll start with the inflows. So interest on the investment. Let's dwell with the additional information. We have the interest on investment. So this is an accrued income. So accrued income we add back. So whatever interest we have in the trial balance, interest receivables, which we have, that is the receivables, but do we have the interest on the investment? Yes, we have the interest on the investment of 640. So we take 640 plus the accrued one. All these are in millions, 24.5. So how much are we getting? That is 640 plus 24.5, total of 66.4.5. Good. So another one is the prepayment management. So do we have any other inflows in that trial balance? Members contribution, yes. Members contribution. How much do we have in members contribution? 250.2. What else do we have? We don't have employers and we have employers contribution. Employers contribution. Employers contribution. Employer contribution of 630.6. What else do we need here? So that one will give us the total contribution. Expenditure. Let's start with the management expense. Management expense. So there is a prepayment of management expense. How do we treat prepayments? How do we treat prepayment? We normally subtract because it is not relating to current year. It is for the next financial year. So you will take whatever they have it as a 7 million minus 0.45 because we are talking of millions and this one is 450,000. So if you take 7 minus 0.45, we get 6.55. Do we have any other expenditure? Yes. We start up there. Investment. Withdrawal from the scheme. Withdrawal. From the scheme. Withdrawal from the scheme of 15 million. We have pension and pension and commutations. Pension and commutation of 209. So get the total of that, subtract to get our net assets. Let's get our net asset. So I will take 664.5 plus 250.2 plus 630.6, getting total of 1545.3. Get the total of this 6.55 plus 15 plus 209, getting a total of 230.55. Take this minus 1545.3 minus answer. I'm getting a net asset of 13.75. That is our net That is our net asset. That is our net asset. That is our net asset. So having done that, my good learners, now we have to look at the statement of changes in the statement of net asset, actually. The statement of net assets, which we have it here. You just need to write the name of the company. So the name of the company, we write Mazuri Benefit Scheme. Are you able to see? Okay, good. Statement of net assets as at 30th September 2024, 2023. So we'll start with the non-current assets. I've seen we have fixed deposits, we have the investment, we have fixed deposits. Fixed deposits. How much do we have as a fixed deposit? 260. So kindly confirm investment, offshore investment in shares, the offshores. So 1200. PP, property, plant and equipment, 800. Investment in unquoted shares, So just complete. 2500. We have quoted shares, 3000. We have government securities, government securities, 590. So that one will give us the total current assets. We go to non-current asset, we go to current asset. You can start the prepayment. Don't forget prepayment of management. 0.45. We have accruals, specifically interest of 24.5. And then, so let's see other. We have the interest receivable. Interest receivables of 80. Interest receivable of 80. Interest receivable of 80. What else do we have? Receivable from members. Receivables from members. Receivables from members, 635.6. 635.6. 635.6, and then we can continue on the other side, on this side. Oh, net asset, that is 13.D. So that I don't forget, 14.75. What else do we have? Current account deposit. Current account deposit of 32.2. I think we have exhausted everything there. We go to finance by. So we have accumulated funds, balance brought forward of 7640, and then we'll take the net assets, which is 14.75. Then now we go to liabilities. Do we have non-current liabilities? No. So go to current liabilities. We have payables, payable to members. Payable to members, 8. What else do we have? Provision for exchange losses. Provision for exchange losses of 160. So that is it. This one will be 168. What about this one? 7640 plus 1314.75, getting 89.75. Add this 260 plus 1200 plus 800 plus 2500, 35. This one is 7760. Add this 0.45 plus 24.5 plus 80 plus 65.6 plus 32.2. This one giving us 772.75. Add this and this plus 7760 to give us to give us 85. So make sure that you are confirming, is this the correct one? So repeat that one, 260 plus 1200 plus 800, 2500, 3000 plus 590. You are not telling me that you are putting, I'm omitting 590 here. So this one should be 800 and 850. I hope this one is okay. Plus 83 plus 77 2.75. I'm getting the total of 922.75. So that is our total assets. And then so we are looking for the net asset, which this one is a net asset. So it depends with the net up the statement you use. So that is our net asset. That is our net asset. So if you take this minus 8954.75 plus 168, we are getting the same here, 22.75. So that one should be the same. So if you get another box, you get another person, they will be using a different approach, but the concept of accounting will remain the same. So you will find another person will, after this, they will bring this liability up here. So when they bring this liability and then they subtract, they will get the net asset, which it will match with this. it will match with that. So which it is the same. Like if you take 922.75 minus, so this is the total assets minus the total liabilities, which is 168. So if you subtract, you will arrive at your net asset, which is 8954.75. So still the same, nothing will change. So that is pension. That is pension. So giving you an assignment of the questions. So that was the April 2024. So let's see another question. If we have another question here. There was a question. Check August, April. Is it April or August April 2025? There must be a question there. This statement of this past paper of mine is starting from August 2024. Which August 2024? Check 2025. Because I'm not seeing with this other one here. They tested this question recently. August 2025, August or April. So let's see, April 2025. Whatever I have it to be starting December 2024. Let's get a new past paper here. Yeah. So do for me April 2025 question 4C. April 2025 question 4C. So the question of Elite Limited. So we have been told that Elite Limited operate a scheme for its employees by the name Smart Retirement Benefit Scheme. The following trial balance was extracted from the books of the scheme as of 31st December 2024. So they have given us the normal contribution by the Elite employers and employees with their value, transfer in from other scheme, individual transfer out to the scheme. Investment in investment income. So transfer in, maybe because it was not here in another question, transfer in from other scheme, it is the revenue to them, or it is the inflow. So you will have to capture in the statement of changes in net asset under the side of incomes or the inflows. That is one. We have PPE, no problem. Government securities, members voluntary contribution, that is no problem. We have a pension, which is a pension. If you look at that pension, the pension, it is up to. We have the pension. They have not mentioned what is this pension. They have not mentioned what is that pension. So we assume it is pension, the payment, because they have just mentioned pension. So what is a pension? So maybe it is a pension benefit paid. We have unpaid benefit, which they have not paid. So you'll have to include in the statement of changes in asset, but also recognize it in the liabilities because it is unpaid. Accumulated fund, we have there. Accrued expense, admin expense, cash and demand deposit, changes in the market values, that is an income. Lump sum retirement benefit, that is an expense. Contribution due, that is an expense. So I give you this an assignment. Kindly attempt, and then we will review in the next class before we look at another topic. So if there is any questions, you can ask.